Good evening. This is Ken Long from Tortoise Capital with the market health check and daily summary update for August 31st, 2009. First, a quick look at the market health check. And what we had is 5 days, 6 days of sideways where we've not been able to break through 104. And then today we had a gap down, significant gap down in the retest of 102. 102, the first support level at that red line, held today. But what we had was the first system shock as we begin testing a potential leg down. Williams percent are closed just below the overbought area, and ADX has closed or is lowered, and then you can see the gap closing between plus DI and minus DI. Volatility remains quiet. We remain in bull quiet, as we have for about the past 6 weeks. On the daily signals, we're still bull quiet. We've pulled back to 70 on the 10-day index. You see we've pulled back here into neither overbought nor oversold. 63% of the time we have been gapping and reversing. And we have mostly the material sector in the 10-day max pain categories. And you can see that we've got some Latin America in the ETF 100 with EWZ Brazil and ILF, which is the Latin American mega cap 40s. Now, in the overreaction system, we do have a signal in ILF, so we'll be buying ILF at the open mechanically tomorrow using a 5% initial stop and then a 5% trailing stop from the open when we take our initial position. No signals in the channeling system. You see the pivot points, we've pulled back to 102.28 in SPY. The 30-day regression line slope still is below its 10-day moving average and dropping as the market has been moving sideways. Failure to follow through is beginning to cause that regression line, which you can see right here, the slope of that. That regression line slope is weakening due to the sideways motion. We've got 4 signals in the 5-day down for ETFs, and that's EEM, the emerging markets. ILF is the Latin American 40, EWH, Hong Kong, and VPU, the Vanguard Vipers. For the utility sector, U.S. utilities. We have no triple screens, and the 30-60 stealth candidates remain as they have been. Merck was interesting today as one of the few stocks that had better relative strength than SPY. If tomorrow is a reversal day, I expect to see Merck to continue to do well. The oversold candidates are Alcoa and Walmart. On the upside, we had a few breakout on the right-hand side. Procter & Gamble and Travelers both were closed higher than their 10-day moving average, and so those are possible candidates for follow-through as well. Here's a quick look at that. This is both the 5-day down in ILF, and you can see that the gap right here is what has created the overreaction system firing. As you can see, this gap between ILF's price action today and the blue line, which is the 10-day moving average, is what's created the buyable gap. This is a quick look at the 4 ETFs that have closed on a 5-day down basis. So we have Hong Kong, EEM, emerging markets. We have ILF, and we have the Vanguard utilities. And now finally, in the Dow 30 and ETF tactical, we have all of the big losers today were, well, a couple of many were related to the weakness in the materials sector. Alcoa, Caterpillar, Boeing, I think, reflecting problems with reduced business travel. Bank of America, the big winners, Procter & Gamble, Travelers, J.P. Morgan. You can see that they were breakouts from their 10-day trading range in the case of the last two. We see weakness in the ETFs in the entire commodity cluster, except for silver and agriculture has turned in pretty decent performances today. XLP, the staples, and TLT treasuries, I think, reflecting a flight to quality and defensive sectors. But again, the mixed commodities, oil, coal, and natural gas, showed weakness today. Very few stocks anymore are on a strong on their 10-day index. I guess a reflection of this relative sideways movement that's been occurring lately. So that's a quick look at the market tactical and daily summary and some key setups in the ETFs. I'm looking to stock ILF and EEM very carefully tomorrow. On weakness, I'm ready to go short EEV and SMN, the material sectors, in a heavy way. So, thanks for your attention.